All right, we are live for the Wednesday edition of the morning check-in. And as always, excited to be back. Looking forward to connecting, finding out what you guys are keeping your eyes on, and sharing with you some stories that caught my attention this early morning. So let's dive into it, man. Hope everyone is doing well this morning. Sorry about my tardiness, just last minute coming across always some interesting topics that I want to try to present within a very timely manner. So hopefully you guys are hanging out with me a little bit and patient as I try to put all this together and to deliver it to you in a concise manner this morning in this morning quick take. Anyway, so let me know in the chat, man, if you guys can hear me. Let me know if everything is running smooth on my end here so I can get into this news updates. And as always, you know the format, get into the spiritual side of things because everything in nature, everything that we're experiencing now is more so a spiritual experience in a natural sense, trying to interpret what we're going through at the same time here. And getting into some market activity. We have some interesting subjects here. We got the Zimbabwe attempting to try to revitalize their currency by putting gold notes in people's hands. We'll see how long that lasts. But then again, it's one of the only nations. It is the only nation that actually has actively utilized gold, even though it's backed by, notes backed by paper backed by gold, supposedly. But then again, that effort, it brings more attention to gold, which is always a good thing. And then we have the bond buying program issued or being announced, be rolled out later this month. And then we have just some other stories, developing as well I want to touch on. So should be a good one. We got Purple Mike checking in. We got Tom. We got Ed. Appreciate you, man. All good. All right. So as always, I want to make sure I remind those, never know who's new to the fold. If you have not, make sure you guys hit that subscribe button and bell notification. Hopefully you are notified. No guarantees. But then again, I'm going to try to show up as consistently as I can. And if you have not, make sure you guys connect with us on the socials, especially the Telegram, where pretty active community throughout the day. They're sharing thoughts, ideas, and on a variety of subjects. So they try to cover a little bit of everything there. So I try to be active as I can there. So always a way to plug in with the community, man. What else we got here? Okay, let's get into it, man. Let me get into make sure everything is flowing on my end here. And then we're going to jump into it. And as always, I try to encourage participation from the community just so I can try to keep an eye on, other topics that I might not have come across this morning. So feel free in the chat to drop some suggestions, ideas, thoughts, or subjects, just because there's more than enough things to talk about, just to keep you plugged in, keep you informed on what's really going on outside the mainstream lies that are being thrown our way. So also in the community tab, I'm trying to put together more articles and things of that nature. So definitely some very interesting things I'm putting out there. So let me know what you guys think. And the most important thing is to read them, digest it, see if it makes sense to you. If it does, share it so more people can also get an alternative perspective on things beyond just the video content. So it's always easier to share articles just because they're less, I guess, controversial in a sense, to where it should be something that you guys can share as well if you're interested. So I want to make sure that's available to you guys. Okay, man, let's get into it, man. Get right to that good word, and we're going to jump into it, man. So today, May 1st, happy first of the month to everybody who is tuning in, or if you happen to catch the replay, nevertheless, happy first of the month here, getting closer to the official launch of summer. And we've got a lot of things to talk about. Okay, so let's get into it. It says, what you're asking. And so this is from Matthew. Let me get this in front of me right now. Let me move myself out the way here. This is Matthew 7:11, New Living Translation. It says, how much more will your heavenly Father give good gifts to those who ask him? And then it says, perhaps you've wondered, how can I be sure I'm asking God for the right things? How do I know my request is in line with his will? Such thoughts may be causing you undue anxiety. It says, first, realize the Holy Spirit indwells you, quote, to will and to work for his good pleasure. According to Philippians 2:13, it says, not only does he help you pray, but he will show you what to pray to remain on his path for your life, according to Romans 8:26-27. And it says, second, God wants you to know his will. In fact, he's even more motivated to accomplish it than you are. So when you're seeking him faithfully, you don't ever have to worry you'll miss it, according to Psalms 25:12. And so it says, friend, if you're asking for something that would ultimately hurt you, your heavenly Father will change your heart. It may take time, but he wants the absolute best for you. So don't worry about whether you're asking the right thing. Rather be sensitive to his guidance and trust him to lead you to his good and perfect gifts. And the closing prayer is, Father, I trust you to lead me in your perfect will. Thank you for loving, protecting, and providing for me. Amen. All right, good people. That is a good word for this morning. The good word for this morning, right on time. Trust in his perfect will, perfect plan for your life, despite all the things we're experiencing. You guys know how the routine goes. But yeah, let's get into it, man. Happy first of the month to everybody checking in. Appreciate you guys. And if you haven't, as always, hit that thumbs up button, show some support for the channel. Hopefully that helps more people plug in to some interesting information in real time. That's the goal. All right, let's get into it, man. I'm excited that more people have been taking the dollar IQ quiz. So hopefully from that, it just gives those who might be new to the whole rethinking the dollar concept just something to get started with in reference to just that knowledge gap that I referred to that we all start off with in certain areas of our lives, and you try to fill in those gaps according to how important the information is to you. So when it comes to the monetary matters, which is what I try to focus on here, just getting people to understand the difference between a fiat currency and a dollar and sound money, rather, just because we weren't taught that stuff in school. Therefore, on top of all the other things we weren't taught in school deliberately to keep us dumbed down and distracted. So now is a better time than ever to make sure that you are aware of what you really believe in so that you can stand on it, because things are getting questionable or becoming more questionable these days. Okay, don't want to rant as much, just want to get into the hardcore facts of what we see here. All right, so as always, just get into it, man. RTD quiz. So for those who may be new to the community, don't know, but I got to put it out there anyway. The dollar IQ quiz, 10 simple questions, but then makes a world of difference to help fill in, hopefully begin the journey of filling in that knowledge gap we have on what the difference between fiat currency and sound money is. And so 10 quick questions make a world of difference. As of now, unfortunately, the people who are taking it, it's exposing their lack of awareness on some monetary historical aspects with the dollar, and so the actual averages have been dropping the more people take it. So it just basically just goes to show there's more room for knowledge in certain departments of your life. So as of right now, I think the average has dropped down to 58%. It was 60% for the longest. Now it's 58%, and so there you have it. There's always ways to be a blessing to other people by putting this quiz out there so people can see what's going on and seek knowledge accordingly. So anyway, but 10 quick questions for those who are interested. Feel free, links in the description. And then once you take that, there's some other steps there to help you fill in the gap with the knowledge sources, as well as additional information about real world events we're experiencing now. I call it the 3 steps to monetary savviness. Links in the description if you guys are interested. All right, let's keep it moving. Let's keep it moving. I gotta do my plugins, man. Gotta do my plugins. So as always, for those who want to find out more about how to protect and preserve what's yours, I encourage you to reach out to my people over at colonialmetalsgroup.com/RTD. And they are the experts that can help you take possession of your retirement portfolio in a self-directed IRA. And so if you're interested, fill out this quick form here. You'll be contacted by one of their representatives, and you can ask all the questions you need to see if this type of methodology for protecting and preserving your wealth is for you, or you can just get physical, hold it, and to do whatever you feel is more suitable for you. But links in the description for more information. Of course, you can call them at 888-521-2448 to speak with somebody there. But other than that, just a way to get questions answered and to see if it's something for you and go from there. So once again, colonialmetalsgroup.com/RTD. Just click the link in the description if you guys are interested in doing that, man. Just a good opportunity for those who are interested. Okay, let's jump into it, man. So as of right now, a lot of people anticipating, waiting on, I guess, the Fed decision. Jerome Powell will get up there and say a lot of the Fed say same things, nothing new, because the goal is kick the can down the road as long as he can. So I don't expect nothing from Jerome Powell at all. But then again, most market analysts, economists, forecasters are all paying attention to market activity this morning, because once again, the illusionary wealth effect is all predicated on the stock market, and where the stock market goes, therefore consumer confidence goes as well. So nothing's going to change. Even if it takes a dip, it seems like earnings call were down for a lot of key companies. It don't matter. It's still gonna bounce back, just because they can't afford to kick the can. They can't afford not to kick the can, given the fact that we're in a presidential election year. So I don't really pay much attention to it, just because what really different does it make at this point? But some things we're paying attention to are some of the risk-on assets that people tend to float to when things are good or things are bad. So get into some market activity real quick to check out some prices of some things. And of course, gold and silver. As of right now, we got a nice little bid on gold. It's $2,300, which is lower than the all-time high. But then again, it's still at a all-time high level, given the current environment we're in, globally speaking. And silver, the Achilles of the current monetary structure, is at $26.50, up 25 cents. And it has also cooled down based upon all the recent market activity. But then again, it's closer to 30 than it was a couple of months ago, especially a couple of years ago. So that right there could be something to pay attention to. But as I always mention, manipulation is your friend. So whenever you see an opportunity to get physical at a cheaper amount, just something worth considering. That's just my 2 cents there. And then nextly here, we got platinum at $954 and palladium at $934 and rhodium $4,500. Yeah, and rhodium is a market that doesn't trade in the futures markets the way that gold, silver, platinum, palladium does. So rhodium is just spot flat out, and it's hard to find, hard to come by for those who might be looking for it. All right, and also looks like I put out an article about Roger Ver. So for those who may not know, Roger Ver is one of the original Bitcoin spokesmen throughout the last decade. Went MIA for the last couple of years, but happened to surface as of lately with a new book. And his book has caused a lot of disruption, I believe, in the power Bitcoin elite plans with that sector. And unfortunately, it looks like he's going to be taken down like everybody else who happens to stand in the way of Wall Street and the powers that be and their desired outcome for using the crypto space as a tool for themselves, first and foremost. And so it's unfortunate Roger Ver will be made an example of. And his situation is interesting. The reason I'm talking about this is because he denounced his citizenship back in 2014. Amongst, him having a large stash of crypto. Apparently he stashed some on the side, paid taxes on some things up front. And so now literally the IRS, 10 years after the fact, he's not even a U.S. citizen anymore, and they're going after him. So that lets you know that no matter how much you think you're getting ahead, no matter how much you think you protect and preserve, you're still property, unfortunately, of the government, even if you denounce your citizenship. And if they deem you a threat in any capacity, all you got to do is make a phone call, and they're coming for you. And so that's just let you know while you're in this flesh, unfortunately, with citizenship, which is not even the case the way things are meant to be designed, you're still property of the government, and they're going to get theirs. So that's just a little nugget for whoever might need that nugget. But anyway, here's current activity as of right now. Bitcoin is not doing too well. And of course, that right there is not something favorable for the powers that be. But then again, it's a buying opportunity for those who know where the system is heading. So start off at 61,000, got down to 56,000. Right now it's hovering around 57,000. That's a nice $4,000 or $5,000 jump, literally $5,000 jump within a couple of hours. So, actually that's within a day. I'm sorry. So it's 57 this morning, and it's, so literally that's a $400 difference within the last hour and $5,000 dip within the last 24 hours. Forgive me. And of course, Ethereum, its little brother or tag along, it's the same thing. In the last day, it has gone down, looks like about $200. And on the hour, it's gone down $4. No big deal. Okay. And of course, all the other cryptos that follow suit, the entire market follows those top two there. And so for speculation's sake, this is where they want the funds to flow. So you can either front run it by getting ahead of it, or you can just get out of it and ignore it, whatever floats your boat. But all right, let's get into some market activity. Markets are open. Let's look at what's happening. A lot of green, a lot of reds sprinkled throughout there. Looks like today the banks are in the green. Not too surprising. Microsoft is in the green. Apple, Google, Meta, Nvidia, and the technology stocks are not doing too well right now. So not sure what news came out, but to be expected. But ultimately, the S&P 500, led by the Magnificent Seven, must continue to trend upwards, or all hell breaks loose. Okay, let's get into the subject of the day. I got a couple of topics, but I thought I would just start off with this one here. Keep an eye on Zimbabwe, just because I think it can be important for two factors. This move here puts the Zimbabwean people into a different category, of allowing gold to float back into the narrative of something that can preserve, protect the Zimbabwean people. And when your government and central bank are on board with reinstating gold, even just the gold narrative back in the equation, that lets people know where you are closer to safety when it comes to the manipulation and destruction that the central banks also created. And so once again, the question I want to put out there to you guys is, how long do you think this will last before it's decoupled and they end up printing more paper labeled as backed by gold when the gold reserves are stolen by the Zimbabwean politicians and bankers and everything else? So I don't have high hopes for it. But then again, is just something I think worth mentioning, because anytime gold is brought up in the limelight now, to me, that's more of the gold standard narrative that the bankers don't want to surface, because it goes backwards instead of forward. And of course, the goal in going forward is to issue digital ledger type technology as a first and primary, as cash eventually is phased out. And so also, speaking of this Roger Ver situation momentarily, by him being a Bitcoin advocate at first, realized that, things changed for the worst in his estimates. And so, as I always say, Bitcoin as a ledger was designed to help distract and divert attention and help build up the infrastructure for the pending CBDCs, which will come. So everything that's going to be rolled out after this next banking situation was all predicated on using the technology that has been built out over the last 15 years by the private sector, i.e. all those brainiacs from MIT and all those smart, younger cyberpunk type kids that were the brains of the operation. They literally were doing this intentionally or unintentionally to basically prepare central banks with the use case scenarios that have been implemented worldwide now for the CBDC. So to me, that's the interconnectedness to this. And I think, what's his name, Roger Ver, about him coming out bringing questions to the Bitcoin narrative is also what got him in trouble. So anyway, real quick here, I want to get your thoughts on this, so feel free to drop some thoughts in the comment section on these subject matters and anything else that comes to mind. All right, let me just make sure I'm caught up here. Give me a second here. Okay, make sure I'm caught up here. Let me see what this Smitty says. As long as it's redeemable in gold, it's good. And that's the question. I that's where I'm kind of trying to see what's the real deal here, because it's one thing to say gold backed, but can the people go get the gold is the question. And beyond the gold coins that they came up with last year that are still in circulation, the average person can't afford a gold coin. So more than likely, people will not be incentivized to go get the gold physically, because they won't probably have enough to redeem those notes, depending on what type of coins they're going to be exchanging for. So anyway, real quick, says Zimbabwe's new ZIG notes and coins began circulating yesterday, marking a significant step in the country's monetary reform to curb inflation, just 3 weeks after the electronic form of the currency started trading. So electronic went first, now the paper form. Says the Reserve Bank of Zimbabwe, the country's central bank, introduced a new gold-backed currency known as Zimbabwe dollar, or ZIG, on April 5th. ZIG joins a basket of currencies accepted as legal tender in Zimbabwe, with the U.S. dollar currently dominating over 80% of all domestic trade. So as of right now, everybody uses dollars, so they're trying to wean themselves off the dollar and get their own currency back in circulation. And ultimately, the reason I think this will probably fail is because having a gold backing of anything puts clamps on the central bank's ability to monetize the government itself. So either the government gets themselves in check with the actual demands and best interests of the people and not themselves, or they're going to lose that peg. They would eventually start to decouple. So as of right now, I think one ZIG is like $13. I'd say I think it's 13 ZIGs for $1. Some type of exchange ratio there. We'll get into that. But it says that in the capital, Harare, residents queued at banks to withdraw the new currency, with many expressing optimism about the change. So people lining up to get that paper. It says here, Mustafa, a local resident, hailed the introduction of ZIG notes, noting its backing by gold as a unique feature that could positively impact the economy. He says, quote, if everyone has a positive attitude toward it and embraces it, I think it will make our economy better. It's all subject to how the central bank and government work together on keeping this honesty going, if it is meant to be that way. It says the physical notes and coins of the ZIG come in various denominations, including 1 ZIG to 200 ZIG, as well as half a ZIG and a quarter ZIG. It says the availability of the small denominations has brought relief to Zimbabweans who previously had to make unnecessary purchases to round off figures to $1 due to the unavailability of small change. It says people are eager to have on our new currency because we were using the US dollar. As for the transportation, some short distances cost 50 cents. Wow. Okay, that's, but we were forced to pay a whole dollar because there was no smaller denominations. It says cash transactions were exclusively conducted in US dollars as businesses rejected the hyperinflationary Zimbabwe dollar notes. It says the availability of the ZIG now has made it life easier for people to transact in different ways. So I think it's a good thing. It says the ZIG, which initially traded at an exchange rate of 13.56 to the US dollar on April 8th, is currently exchanging at 13.43. So that's a 10-cent fluctuation there, but that's a good start. It says the new currency is backed by precious metals, mainly gold, as well as foreign currency reserves, according to the Zimbabwe bank governor. It says despite the positive reception, economic analysts prospered over caution that the fundamentals for a strong currency are not yet in place. But of course, the ZIG is trying to address those fundamentals, especially around unsustainable growth in money supply, which then causes our inflation to remain high. So now it's just a matter of waiting to see how this operates. So from what I'm reading here, it doesn't look like you could actually take those gold notes to the bank and actually be able to withdraw physical gold. And so once again, this could be a scheme just designed to give the narrative of security and temporary constraints on the government and the central bank in the meantime. But then again, we'll have to wait and see. But I think this is important just because it puts gold back in the equation. And I think if this succeeds, more nations will follow suit, because Africa, being the richest continent with the most minerals and natural wealth, it will be in their best interest if their governments weren't corrupted and bought out by China and other nations there to help restabilize those nations there and bring a little bit of prosperity back to that land there. That'd be something worthwhile there. So time will tell, but we'll see. Anyway, keep it moving. Let me get to some other stories here. So as of right now, what is also making headlines is the Treasury is looking to issue their buyback program. And so the buyback program, this is the first time in 20 years that they've done this. And I want to share with you just some of the significant changes that have taken place outside the obvious, but put some stats and some figures to it so people can really realize that regardless of what the central bank or the Treasury is doing, they're doing it in their own best interest to buy them time, as well as to hopefully keep some type of interest in U.S. liabilities, as I call them, globally speaking, and to provide liquidity in this current environment where liquidity is not the most plentiful, as well as trying to remain confident. So just a little note here says U.S. Treasury announces the launch of the buyback program for May to July quarter. First buyback operation scheduled on May 29th. And then, so here somebody says, for those asking what this means, here's a little explanation. It says, what is a Treasury buyback program? It is a reduction of the debt, basically taking the current debt issued at this current moment and trying to bring some of that back into their coffers, i.e., buying it back, providing liquidity for the people in need of it, as well as trying to make it appear that they are trying to stabilize and contain the debt, even though the deficit is beyond controllable at this point. But then again, they're buying back a certain type of debt, and then they're also issuing more longer term debt now. So during the crises, they issued large amounts of short term debt to try to the whole yield curve control narrative type of thing. This is ultimately what it boils down to, yield curve control. So now they're buying back and then to short and entering and re-entering the long denominated debt into the system, trying to balance that out. Okay, it says U.S. Treasury sometimes buy back some of the Treasury bonds or notes it has previously issued to investors. This reduces the total amount of outstanding U.S. government debt. It says market liquidity. Buybacks can increase the liquidity of a certain Treasury security, bond, or notes, making them easier to buy and sell in the market. This can support a healthy and stable Treasury market. And so, based upon a video I did the other day about the clearinghouse having issues, all surrounding the 26 trillion or so dollars in U.S. Treasuries out there in total, and the concern that a lot of this quote unquote collateral, being that it's underwater in a sense, the prices is going down due to the high interest rate environment. So what it looks like is they're trying to stay face and trying to instill confidence into the markets that this debt is something that they can continue to maintain, and try to sell the narrative that there will be a continuous flow of steady buyers out there if they're able to pull this type of things off. And mind you, this is just a short-term mechanism from May, as it says, to July, to get us through the summertime months and head into the presidential election at that point, where who knows what will happen. So, but the last time it took place, I want to go back in time a little bit. So I actually found, because I couldn't find any more detailed information on this current buyback program other than what I just mentioned, But to go back 20 years ago, and actually this is from January 13th, the year 2000, Treasury Department launches the debt buyback program. So this was the first time it was launched, I believe. And Treasury Secretary Larry Summers was in office then. And it says on Thursday, he announced the introduction of the debt buyback program, an important new tool. So once again, this is a new tool that was instituted back then for Treasury's management of the public debt, and announced Treasury plans to buy back as much as $30 billion of federal debt held by the public. So imagine, think about this. Going back 20 plus years ago, how small the figures were and how the debt was serviceable and more manageable then than it is now. And I was reading through this, and what I gathered was that, from this type of buyback program 20 years ago was considered somewhat of would have been considered a shock in comparison to now, because if they would have even known how bad things were, fiscally speaking, today, they would have probably not even did this buyback program then, just because we were apparently, according to the figures, running a surplus during this era here. And so think about this. They were buying back just a measly $30 billion. Like, what was that? What is that for? But then again, it just goes to show how outrageous things have become. But some of the buzzwords that stood out to me, according to Larry Summers, it says buying back old high interest rate debt allows us to manage the federal debt in a way that saves the American taxpayers money. So the narrative back 24 years ago was, by buying the debt back at the tune of $30 billion would help save American taxpayer money. The taxpayer. This is the narrative they're trying to sell us off back then. As of right now, it ain't got nothing to do with the taxpayers, because it's already too late for the taxpayers, because current tax receipts don't matter no more. And so Larry Summers said, we are committed to paying down the federal debt in a way that best services the interest of the American taxpayer. So the narrative then was that they were trying to pay down the federal debt. They're not even talking about that nowadays, because it's not possible. It says during the first half of the year, the Treasury plans to conduct several buyback operations that may buy back as much as $30 billion in 2000. It says debt buybacks have several advantages for the federal debt management. They were trying to manage the debt. It says they enhance the liquidity of the Treasury benchmark securities, which promotes an overall market liquidity and should help reduce the government's interest cost over time. So during this time frame, they're buying it back to provide liquidity, as I just mentioned, which promotes market liquidity and keeps the government interest payments in manageable ballpark. So fast forward 24 years ago, we already have debt GDP over 130%. We have interest rates that have surpassed $1 trillion, and the figures don't equate to the same narrative that they try to sell the people on back then for today, because it's like this is an emergency move now, just for a 3-month window. Then what happens after that? Anyway, so I thought I would just share with you some things here, just looking at the federal government's balance sheet momentarily, just to show you the big difference in narratives and how bad things are and how that has impacted us the most. And so we're going to use a time machine. Let's go back to 2000. So the time machine here, go back to 2000 when Larry Summers first issued that statement there. So just look at the federal government's situation here. So at the time of Larry Summers announcing the first buyback program in the year 2000, the national debt was at $5.5 trillion. Fast forward today, $34.7 trillion. Large gap there. You do the math on that one there. U.S. federal spending was $1.8 trillion. So literally, to fund the operation, to fund the federal government, it was $1.8 trillion. And that equated to, at the time, debt per citizen was $19,000. Debt per taxpayer, people who actually paid taxes, was $52,000. And the U.S. federal budget, look at that number there. U.S. federal budget, $301 billion. I had to get my zeros together. $301 billion. So, and what's notable is it's green, meaning that it's a surplus. U.S. federal budget at that time was beyond manageable when they were doing the buyback program then. And to look further at our revenue streams here, we had $2.1 trillion in tax revenue coming in. So 2.1 coming in. So government's income was 2.1 trillion and government expenditures was 1.8. So that's that $300 billion surplus that they're saying that we had in the year 2000. So technically speaking, our economy was in a very decent place compared to where it is now. And you have just overall figures here. There's a lot more green when it comes to our revenue sources, income tax here, payroll tax, corporate, a lot more green there because we're in a surplus environment. And then you look at all the other expenditures. Let's go. We got total personal debt was 8.7 trillion. Mortgage rate 6.9. We got consumer debt was 1.7. So credit card was 706 billion at that time. Okay. So what am I hitting at? Now let's go back. Let's go to today's figures. Just trying to illustrate here how things have changed substantially since 2000. So we're going back here to today. Now, just look at this sheet here. There's a lot more red. And of course, they've done a better job of updating things, but there's a lot more red in the much larger figures. So today, 34.7 trillion and counting. U.S. federal spending is $6.6 trillion. And you look at how much comes in. Tax revenue, 4.8. So that leads to a deficit of $1.8 trillion, which is probably on a little bit low side here. But it says here the actual is 1.96. So literally closer to $2 trillion. So closer to $2 trillion deficit. As of right now, debt to GDP is 122.24%. And then you look at all the other debt instruments here, U.S. total debt interest, bank interest received, and the like. And so what does that lay it to? Literally, in that short time frame there, not short time frame, but that 24-year period of this buyback narrative that they're trying to spin out on trying to provide liquidity as well as save the taxpayer money that Larry Summers mentioned, there's no such thing. Because from 5 trillion in 2000 to 34.7 trillion now, what has taken place? Consumer cost of living has gone through the roof. And to show you what that looks like, I actually try to do some math. Give me a second here. Let me see if I can grab here. So I try to do some math here just to let you know how that has impacted us all. Give me a second here if I can, and I'll show you exactly what I'm referring to. Let me bring this up here. Okay, so how exactly does this apply to you? This is simple. All right, so I said, I asked a question on Perplexity, a great way of just trying to do some quick math without having to wreck my brain. It says, how much purchasing power of the dollar has been lost since 2000 to 2024? So that's so now 5 trillion national debt to 37 trillion. Ultimately, that has all been debt taken out by our government and monetized by the central bank. And it impacts the actual users of the currency because the currency is what has been the primary method of choice. And so this is how we, the people, have gotten poorer as our government has become more indebted, regardless of any buyback programs or whatever they call themselves trying to do. It's all about the currency. The currency is the weapon for the government and the asset for the worker, the saver, the investor, because it's the focal point of our financial lives. But this is what has impacted us most. And it says here, the answer to this was, according to the search results, the purchasing power of the U.S. dollar has declined significantly since 2000. In 2000, $1 had the same purchasing power as $1.81 today, a decline of 81.38% over 24 years. So literally, what cost $1 then is now $1.81. This means that $1 today can only buy you 55.249% of what it could buy in 2000. The dollar had an average inflation rate of 2.51 per year between 2000 and 2024. So literally, this is the definition of compounding inflation. So within that 24-year period, annually, 2.51% annually over the last 24 years, it resulted in a cumulative price increase of 81.38%. So literally within that time frame there, our lives have become 81.38% more expensive when you use it to in valuation of our currency. So it says, in other words, the real value of the dollar has decreased by 44.751% over this period due to the expansion of the monetary base, is what I would use the word inflation as, eroding its purchasing power. So literally, within that time frame there of me sharing with you just the balance sheet of our government based upon the debt they've issued and the deficits they're now running, we've basically lost 81% of our lives have increased 81%ish, and we've lost more than half of purchasing power within that 24-year period. So regardless of whatever the government tells you, whatever the government's doing, it all boils down to the purchasing power of the currency, because it's reflected in how many and how much of what you can do and can buy with the currency units you have in your possession. And that's the danger behind not understanding the monetary aspects of our currency, because it is a financial threat to your life and your future and your kids and your unborn kids and your grandkids. And you just name it. The dollar, Federal Reserve note, is a liability. Okay, keep it moving. But on a lighter note here, it's just something worth bringing up from today. Mastercard's profits. Mastercard profits bets on strong card spending by U.S. consumers. So, Mastercard is doing quite well as people use their cards as their second option or some first options for some when it comes to sustaining themselves. So just something we're bringing up. What else we got here? That's just the quarterly deal here. And then, so here's another interesting little visual aid that just makes you think. Look at that. Look at that quick sell-off. That's a sharp sell-off there, CVS. But it says CVS pharmacy stock crashes 30% after posting a massive earnings miss and lowering its guidance. So more companies, like, we saw McDonald's is not doing well. Just let me actually, for the sake of, because I didn't get a chance to see which all countries, but look at this. I mean, is this something that would you buy this dip here? Like, and also I'm thinking about, like, from an investment standpoint, based upon the legacy model that we've been sold of taking our hard-earned currency, put into the hand of strangers to allow it to grow. At the same time, I just showed you how compound inflation is eroding our purchasing power. At this current moment, there's no way that you can outbeat the rate of the monetary expansion, i.e., currency depreciation in real time. So literally, sticking to these models here, we're subject to the interest rate environment with interest, the debt issuance and all these counterparty risk between you and your financial future. And it just disincentivizes me more and more of wanting to invest into companies that I don't really think have a future. Like a lot of the, things that have been introduced to us now aren't really necessary. And so even like, beyond the Magnificent Seven leading the world for the most part and keeping our equities markets afloat, most of the companies, the other 493, you got to question, like, are they really necessary? Do they really add value that the people need outside of us just being blessed and privileged to be able to have bought and invested in companies that are not necessary, like a requirement for our lives? Like, nobody needs like small little knickknack gadgets for just fun and entertainment's sake. Those are things that have become luxuries. So as we shift into this new paradigm of investing, I'd imagine a lot of the luxury items that we've enjoyed because of having access to credit and the reserve currency, as that shifts, won't be necessary. So we'll see how this plays out. But, just some things that caught my attention here. And then lastly here, I want to talk about some other things that might be worth bringing to your attention as well. Let me just share with you some things I bookmarked here on X that are subjects that should be important. So here is a interesting report here from internal data from the Department of Homeland Security that reveals 45 plus U.S. cities that hundreds of thousands of migrants have flown into via the Biden administration's controversial CHNV mass parole program. So the data was obtained by Homeland GOP via subpoena that was provided to Fox News. So this is just very interesting. And this is what makes me question the narrative of, DeSantis being that guy that's like, he's done such a good job at being the resistance to the establishment that it makes me question and wonder, how these stats here actually take place. And so also what was his role in this? Just because the majority of these people were flown into Florida, and Florida was supposed to be one of the most strictest states when it comes to this. But then again, Biden was flying them into Florida in large droves, and then DeSantis was busing them to the Democrat area. So, and other Republican areas, or busing them up north. So, is that a direct? Are they working together on that, or just things to make you wonder? Because they were flown in to Florida. Why didn't DeSantis fly him back if he really wanted to disrupt things according to the way that we're being sold? But it says the DHS data shows that during 8 months stretch from January through August of last year, roughly 200,000 migrants flew into the U.S. via the program, with 80% of them arriving in the state of Florida. 80% of that 200,000 flew into Florida, in Miami, Fort Lauderdale, Orlando, and Tampa. So here's the states here that got the most foreigners. Miami, Fort Lauderdale, then New York, Houston, Orlando, Los Angeles, whatever, and then Tampa. So it's like, okay, DeSantis, were you helping and painting a picture of being disruptive, or just things make you wonder. Okay, here's another company. Starbucks ain't doing too well. I'm not a fan of Starbucks, so I don't really care. The collapse of Starbucks is truly insane. Company-wide same-store sales fell 4% and traffic fell 6%. In China, some stores sales plunged by 11% and an 8% decline. International same-store sales fell 6%, whatever. So it looks like Starbucks, might be on their way out. And I think probably has something to do with them going woke. Don't know, but not really interested in Starbucks. Here's another interesting story. It looks like the Israeli support by the U.S. is going to take another phase, because it looks like the Biden people who control Biden, they're flirting with the idea of flying in Palestinians as refugees, which helps Israel, because if Israel continues to bomb, scattering the Palestinian people, Biden's going to come in and save the day by flying them here, which only helps Israel continue to destroy the land, to take it over for their own sake. Great strategy. But it says Israel is preparing to send Palestinians from Gaza to the United States. Biden is considering bringing Palestinians from Gaza into the United States as refugees, according to CBS. Federal U.S. agencies are figuring out how to resettle the Palestinians from Gaza. According to the report, one proposal would use the United States Refugee Admissions Program to bring in Palestinians with U.S. ties who may have escaped into Egypt. Those who pass the eligibility requirements would then fly into the United States with refugee status. Watch this. Receiving housing assistance and having a path towards citizenship. So Israel does the bombing, does the destruction, does the disrupting of the Palestinian people, and the U.S. comes in to save the day and fly them over here, give them housing, food, credit card, debit card, give them pathway to citizenship. What a great partnership, huh? They destroy, we take them in, because that's just the agreement we have with them. So who's really the leader here, or who's the follower? I don't know. I'll just let you guys chew on that. But this is just some things that caught my attention, man. But once again, reading comments from this article here, and the people who are a lot of thoughts here, people are like furious, saying like the Palestinian people don't want to be flown over. They don't want help. They just want access to their own land. They don't want to be taken off their land because of Israeli, invasion, which I'm like, okay, that makes sense. Like, I would imagine, like, somebody come bomb Michigan and put me in a very disadvantaged state to where I couldn't take care of myself, and they were trying to steal my land. And the good guys came and said, hey, we'll just bring you to our neighborhood. We'll bring you to our house and give you, citizenship. Like, I don't want to go to your way. I want to stay home. I want to stay where I'm at. Help me fight these invaders here. You know what I'm saying? Give me the means to fight these invaders that are taking my land. So yeah, good guy, bad guy. These narratives, boy, they never change. But okay, that's what I have, man. Interesting morning, to say the least. We'll wait to see what Jerome Powell says. Don't expect nothing new. Markets might dip, but then again, we got a presidential election, so they can't let them collapse. So there'll be a rally, and it looks like the buyback program will probably equate to funds or liquidity provided by our government that will probably flow its way back to the stock markets and other risk assets as well. So anyway, that's what we have this morning. Will be an interesting day, to say the least, people. But I want everybody to be blessed, be safe, and enjoy your day.